We've got Deven Choksey. He's joining in on the show. So much to talk about. Deven, hi there. Good
Right.
morning. Let's begin then with the outlook of the fact that a lot of the heavyweights are really pulling their might now. You're finally seeing participation from a lot of these stocks after being backbenchers, if you will, for a while. Do you believe this trend will continue now?
Evan, good morning. Well, I think this is completely validating the viewpoint which we have always discussed, that the big is getting bigger. You look at the size of the companies which are currently existing, particularly among the Nifty 50 or Nifty 100 companies. Those companies are the ones I think which are basically growing at a size which was never seen before. As far as I think their growth is concerned, they've been growing now. I think showing the promise to growth. I think at a consistent rate of growth. Look at I think the HDFC Bank. It is talking about doubling the size in 4 years' time. Look at I think likes of Reliance, which is I think now showing the signs of I think further doubling the size from the current levels, with a 20% kind of a growth achieved in the consumer-facing businesses, and also I think the financial service arm which is getting demerged. So if you are looking at the some of the larger companies, even the same situation would hold true for even some of the IT companies, I think, which is showing the signs of doubling, if not in 4 years, maybe in 5.5, 6 years. So that is where probably I think you are seeing this kind of a growth continuing. In my viewpoint, since they are heavyweights on the index and they represent the indices, of course. So in such situation, when they start going up because of the higher amount of money coming into the system as well, I would think that I think indices would naturally go up. Yes, I think in some of the large investors who are entering into India market from global scenario perspective I'm talking about, those investors would find merits in buying into some of the larger companies to begin with, because I think that they have got the depth as well. So liquidity is right now being chased, and I think the additional funds which are coming in, they're getting into the larger market cap companies as well. So I'm not very surprised that I think they're going up. The big is getting bigger is the underlying understanding that we are carrying today.
Devan bhai, let's understand autos. Auto is turning out to be the sector of the year. Having said that, most of the auto stocks are now nearing their historical averages. They are 10-15% away from the historical averages. So do you think this comeback rally in autos is over and one is better off booking profits in a Maruti, Mahindra and Mahindra, even Leyland now?
So, Nikunj, in broader sense, the prices have moved up, agreed, on the stock side. But that's a typical tendency of the market that whenever they see the direction changing, they would probably, I think, buy in advance, and probably, I think, the discount gets over. So, to a certain extent, I agree that in the near term, the prices have actually, I think, scaled up, and there may be some amount of cooling period before which it goes up. But on the other side, I see the fundamental shift happening, particularly in commercial vehicles. And that is a space where I believe that I think there is a story to talk about for next 5 years. Because in commercial vehicle segment, on one side, because of the government's continuous thrust on putting money into the infrastructure, is suggesting that the newer transportation vehicle requirement, I think, is increasing. On the other side, the PLI scheme is attracting new investment into the country. Industry is expanding into brownfield as well as greenfield. So that is also resulting into higher amount of demand generation. New roads getting created is significantly putting the thrust on the logistic management. And as a result of which, I think there is a demand generation happening. And I think most importantly, the scrappage policy whose effect is yet not seen as far as I think the new demand generation is concerned, which we believe that around 2.5 lakh additional commercial vehicle demand per annum is expected to come just due to the scrappage policy coming into force. All this put together, the demand scenario remains extremely upbeat about the commercial vehicle. And that is where I believe that I think the situation could be absolutely fine for them for next 5 years. Even though Ashok Leyland Tata Motors may have recently moved up, but in my viewpoint, I think they are the stocks whenever the market gives some kind of corrections, one would like to buy into the portfolio. So given the, I think, visibility of next 5 years that we are seeing currently.
Uh, let's pick up some more stocks here. And one stock which I guess saw a lot of volume action and off late that in a sense has done rather well is Piramal Pharma. Do you track this one, Devan bhai?
Honestly, I think haven't got any full coverage on this particular company, so wouldn't be knowing, I think, immediately many other aspects, including I think the near-term outlook for this company. So would probably I think reserve my comment for some other day.
Right. Deven, one stock that Nikunj was flagging off on, I want to, revisit that with you. UBS has come out with a note on Havells. They've upgraded the stock to now a buy. The target price also has been up to 1,900 bucks. They're saying that the structural growth story is back into focus alongside a cyclical kicker. They're saying that it's a $40 billion opportunity by FY28, rising at 10% CAGR, earnings CAGR currently at 26%. They're saying the concerns over the past 2 years are now behind them. Capital allocation is going to now return accretive. The valuation wise, they're saying that it's the best play when it comes to consumer electricals. And they say that they're seeing a, sustained revenue share gain, a higher share of premium products, and a turnaround for Lloyd as well, which is in the offing, which is going to aid upside for Havells. Wanted to understand what's your thought here.
So yes, Aisha, I think we believe that this underlying story remains absolutely very, very convincing for FMEG companies, and that is where I think this company is positioned. In my viewpoint, I think the growth will increase on few counts. On one side, the discretionary spending is also increasing, largely because of the fact that per capita income is increasing. Given the kind of size of the growth in the economy, uh, this particular space, electricals and the FMEG, as we call it, as I think would probably growing faster than what we have seen it before because of the urbanization also happening and happening at a good speed. So demand scenario remains absolutely convincing, and the company's position because of the distribution reach that they have created is also remaining, I think, very compelling proposition. In last 10 years, if I have to see this company, how they shaped up their growth in distribution, it's commanding. So from that perspective, to definitely, I think this company looks reasonably promising for sure. One point I think where I'm slightly, I think, not fully convinced about, they have recently taken a move to go into the contract manufacturing, largely because of the fact that I think the capacity of the Lloyd's brand, which they are having, is not getting fully utilized. So, which they want to possibly offer it to some of the MNC brands for growth purpose. No doubt it will create the volume bank for them, but that would come at a cost. It would come at a margin compromisation. So, how exactly it would work for the company as far as the margin aspect is concerned? That impact, and I think the combined margin is concerned, that impact is something which I have not fully understood. So that is where I'm keeping myself little reserved on this aspect. But otherwise, I do agree with your assessment. The company looks reasonably good from the point of view of seeing the visibility for next 3 to 5 years.
Right. Okay, Deven, lots more to talk about with you.
In the meantime, Deven, let's get in your thoughts on Tata Elxsi and the numbers, because post the kind of earnings, you had JP Morgan as well, which is an underweight rating on the stock, saying that a lot of challenges still remain and that growth momentum is slowing down. Would you concur?
I believe that I think when this kind of opportunity comes, when the concerns remain, and I think some challenges the companies are facing, I think that is the time for investors to buy into such kind of companies. I'm happy that I think such kind of challenges are basically resulting into some kind of reservation from the analyst side for buying the stock into the portfolio. If these particular challenges are to be met, I think no other company better than Tata Elxsi would be, I think, be in a position to meet those challenges. That is my conviction. And that's where I believe that I think this company remains, I think, absolutely convincing opportunity from investment perspective. Maybe currently the valuations and I think little slowdown in the, I think, the uptake as far as the revenue book is concerned is basically seen as a little challenge. But that correction is a welcome correction in the price. I believe that I think given the kind of presence that they have in each of the verticals in which they are present, I would think that I think they've got a huge amount of fabric to, I think, we actually now from here onwards. From that perspective, I believe that I think this company remains convincing. We are convinced about the business model of the company, of course, but at the same time, I think the demand scenario emerging stronger. Respective verticals, I think for Tata Elxsi, we are remaining. That is where I think our conviction comes.
Good to have you on board. Thanks so much for sharing with us your insights.